the story of the Japanese carry trades is incomplete. So Japan has recently been experiencing interest rate hikes, and that has sent a sort of a mini shock all over the world. And people are worried that this may be the beginning of another global crisis. But I don't think that is, and I'm going to show you why. And I'm also going to explore why a little bit of the Japanese economic history and geopolitical history, and show that how it translates to the problems that Japan still experiences today, including its high debt or low interest rates. Those are just symptoms of they're just the overhangs of a crisis that happened a few years ago, as well as seeing that Japan did not just lose 1 decade of economic development and growth, but rather something near 4 decades, 3 to 4 decades. Around 1940s, Japan was this strong expansionist country that wanted to take over lands all over the Pacific. So it wanted control over the Pacific. Other powers like France, Spain, the US, and Britain all had their various territories, and Japan was expanding like crazy from China into the Philippines. Basically, it wanted to control all the territory around the Asia Pacific region. So what did it do? So it invades China and takes parts of that, and then it tries to take some territories belonging to the Allied powers, and this doesn't make the European and US powers very happy. So what does Japan do? Japan is in dire need of resources like oil, because its army is out there. It has vehicles and tankers and machines and war machines, and needs to power them. And so while it expands, the Allied powers are not so happy, and they give Japan a warning, and they also disallow the exportation of oil into Japan. So Japan is facing an energy crisis, even as it seeks to expand even more. So this makes Japan angry, and Japan doesn't want to lose territory. So what it does is that it wants to expand its territory, but it knows if it continues the expansion, that is going to anger the US, and the US, because it has a base in the Pacific, that's Hawaii, and which has Pearl Harbor in it, Japan now decides that let's first attack Hawaii so that we prevent the US from preventing us to expand. So basically, that's what they do. So they fly to Hawaii, and they boom, 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 and they bomb the shit out of there. So what ends up happening is that the US, which wasn't fully committed in the World War, which was happening at this time, is now really pissed off, and it wants get revenge on Japan, retaliate for the about 3,000 soldiers who were killed there, because US had a very, very hands-off stance with regards to the war. But as soon as it was touched, it really made it want to beat Japan now. And one thing Japan did not know was that there was going to be bombs. It had not accounted for such, because I think that was the first time that atomic nuclear bombs are going to be used there. And Japan had underestimated the US on a lot. For example, it had underestimated the US capability to marshal out machines, the industrial capacity of the United States. And so that was like a very, very big and bad miscalculation on Japan's part. So now Japan has its expansion being opposed by countries, and now US now. Also, Japanese assets like bonds and debts have been frozen. So that's a really big hit. So it has to like now print a lot of money, find other ways to get resources, and the retaliation that it had tried to prevent is now at its door. So that was the beginning of the downfall of Japan at that time. So the World War ends with the US bombing Japan, and then immediately after it was bombed, the US now comes in and begins to establish a new government. Such a government is not going to have military. It's not going to be all the militaristic elements and expansionist elements within Japan are exterminated or removed, and the US helps Japan establish a new constitution that also basically outlaws Japan having an army. So Japan was located whereby there is North Korea, South Korea, other China, Russia, basically communist countries. And during that time, there is also a war in Korea between North Korea and South Korea, and that provides Japan at the time, which is just basically starting to recover from the World War II disaster, nuclear disaster. The war in Korea provides them with a market demand for machines and vehicles and weapons. So the United States helps Japan bring up the industry. And remember also here that there is something that the United States is also gaining, i.e., it's now gaining a very good geographic, let's say, leverage point, because Japan is well situated within the Pacific region. And basically, some people have described it as a floating ship for the US Navy or US military. So the war in Korea provides Japan with a way to bootstrap its industry, and this makes like Japan like recover really quickly. So things are built, industries are coming up. Even if things are being built in Japan, this is laying the foundation for another crisis, a crisis whose effects are going to be felt until 2020s. What exactly happens in Japan? So, as you see, a lot of the activity that's happening, a lot of the building happening in Japan is being funded by debt, right? So, money is being borrowed, and that's helping expand the industry. So, that happened from the 50s up to the late 80s. So, there's a lot of booming, a lot of economic growth, an economic miracle, as some have called it. But after the 80s, or during the 80s, something funny begins to happen. See, a lot of the borrowed money is now going into stocks, into land. So people are borrowing money, but then they're using that money to fund stocks and to fund land. But remember that a lot of real estate is not very productive. It's not as productive as you getting some money, going and starting a factory, or if you buy stocks, then it's not really very productive as using that money to buy a business and generating products. So that's what happens to Japan. A lot of money is being pumped up into stocks, into land. And what effect does this have? By the way, if you're liking this video, you can press that like button. So essentially, prices for stocks and land are going up because of increased demand. And when demand increases, the price increases, right? So the price of stocks and land goes up. And this has the effect of making people feel more wealthy. And even beyond feeling wealthy, because they have more land and more stocks, they can now go to the bank and even borrow more money against that more collateral or higher valued collateral. So there's even more borrowing and more leveraging up, right? Until trouble happens. In the late 80s, the Japanese stock market bubble happens, and then there is the raising of interest rates. The Central Bank of Japan, BOJ, hikes interest rates. The stock market bubble crashes. That's when trouble now really begins. Damn. People who had borrowed are basically wiped out. Their collateral is torn into pieces. And banks are selling off debt, are selling off stocks in order to recover their money. So a lot of like heavy stuff is happening in Japan, and people are becoming more poorer. And in such a situation, the government usually has two options, right? Any sane government usually has two options. I'm not saying that the government of Japan did not like really, I don't know. You see, modern governments usually have two options when a debt crisis like that hits. Number one, it's you allow companies to take losses. So in that case, banks which had lended carelessly will take that loss and register a loss in their books. Number two is to lower interest rates and do a lot of printing of money. How does that help at all? If you lower interest rates, then you make borrowing cheaper. And then when you make borrowing cheaper, you can make repayments of those debts become better, become faster, because you can simply borrow new money in order to cover your other debts. Second thing is to print money. Okay, so you print a lot of money, and when you print a lot of money, there is inflation that happens, and when that inflation happens, value of the debt, the effective value of the debt is reduced, right? So those are the two options that sane governments have. The thing is that the government of Japan never did this, and this would come to haunt them for a very, very long time. So what exactly happened? From the 1990s, there was very low economic activity, and the government wants to stimulate the economy by lowering interest rates, right? So they want to lower interest rates, make borrowing cheaper, and so as to make the economy recover again. But remember that the government of Japan, the banks still have losses that they've not accounted for from the people who are doing stock speculation and real estate speculation. So what they're doing is that the banks allow the companies that had borrowed money, the companies and the people, to keep on rolling over their debt without, so any income that the companies make, almost all of it goes back into repaying the debt, and this slows down the economy so much. What instead should have happened is that the government of Japan could have sat down with the banks and made them account for losses, so that the slate is wiped clean, and so that companies now can have borrowing in order to expand, not borrowing in order to repay debt. So that was like something bad that happened. So the interest rates that were instituted by the Bank of Japan also allowed for the carry trade to happen. The carry trade is basically where investors would borrow cheaply from Japan, take that Japanese money, and then send it back to, and then go invest in a government bond elsewhere in another country, say the US, which had interest rates of say 4%. So borrow at 0% from the Bank of Japan or from Japanese banks, and then invest that money into bonds of countries like the US or in Europe. So that had a very deflationary effect on the Japanese currency because people are selling, people are borrowing Japanese yen, okay, and then they sell that Japanese yen for dollars, let's say, and that was going to be paid back in the future. So there was a lot of selling of Japanese yen in order to buy USD, in order to invest in US bonds, right? So there's a net selling effect on the Japanese yen, which has a very depreciating effect on the yen. And that was a very decades long thing, you see. So you see, the problems of Japan really began around the late 90s, and people mention it as the lost decade. But if what's if that has lasted for nearly 30 years, I think it's maybe right to call it Japanese lost decades.